Gold is sitting at $5,042 this Sunday morning. To the 98% of people out there, this looks like a milestone to celebrate, a large round number flashing on their screens. They see the green candles and they think the race is won. But to the 2% club, those of us who actually look at the plumbing of the financial system, $5,042 isn't a finish line. It is an invisible wall. In the next 10 minutes or so, I'm going to give you a decision matrix that the mainstream media won't touch. We're going to talk about why silver's recent collapse from its January highs is the biggest what's in it for you of 2026. We'll compare physical versus paper assets to see which is more cost effective in this volatile environment, and I'll reveal the black swan signals that could send this entire plan into reverse. Please stick around until the very end, because I've prepared a Monday morning macro checklist. I'll be watching the London Open at 8 a.m. GMT to see how the institutions react when the bell rings. You need these 3 specific triggers to know whether to consider buying, holding, or hedging before the volatility takes over. Now, before we dive into the Fibonacci levels and the Warsh Fed pivot, I have to address this community directly. Over the last few days, well over 100 of you have reached out with condolences for the passing of my mother. My wife and I have spent the last 6 years of our lives as her primary caregiver after the demise of my father and brother. It was a journey of duty, sacrifice, and deep love. Losing her has been truly heartbreaking. But there is a detail I haven't shared until now. Virtually every single day, she would ask me, "Richard, how are the videos going? What are your subscribers saying today?" She was my most consistent viewer and my strongest supporter until the end, at age 91 and a half. Even when I took that 6-month break between Illuminati Silver and the relaunch of Money and Power, she was quite upset. She didn't want that break to happen. Part of the reason for the hiatus was the extra care we had to provide for her. But she never wanted her needs to silence this channel. She believed in the mission of the 2% Club, the idea that people deserve a voice of reason. So if you're wondering why I'm still here today, it's because she wouldn't have had it any other way. Now a vital point of clarity. I am a retired financial and business advisor. I spent decades in the trenches of the industry. I sat in the rooms where the various financial products were built, trying to guide my clients and customers as to the most appropriate path for their long-term futures. Because I am retired, I'm no longer legally able to give financial advice. So rather than being your advisor, I'm hoping to be the ambassador of the 2% Club, sharing my knowledge and experience to help you think through the macro data so you can make your own sovereign decisions. What I can give you is a perspective that 99% of people on YouTube cannot. I can see the market plumbing beneath the floorboards. If you want a sober Sunday morning ritual that prepares your mind and your wallet for the week ahead, join our community of wealth architects by hitting that subscribe button, please, right now. We don't chase hype, we build systems. To understand why $5,042 matters, we need to look at the extraordinary start to 2026. This isn't just another good year. We've already seen gold reach a staggering all-time high of $5,598 in January. We saw silver explode to over $121. These aren't 2025 numbers. This is the reality of the 2026 repricing of trust. But after that parabolic run, we saw a violent correction. Gold has pulled back to this 5,042 level. Why is this a trap? Because $5,042 represents a critical technical pivot, the Fibonacci 61.8% retracement level from that January peak. In my career as an advisor, I watch the institutional algorithms very closely. They don't care about your feeling on the economy, they care about levels. Right now, an asset hitting this level either consolidates for a significant second leg up or realizes the liquidity is gone and collapses back to the mean. The reason $5,042 feels like a trap is that the smart money is waiting for a catalyst, while the 98% are jumping in thinking they're getting a bargain. On the 30th of January, the game changed when Kevin Warsh was nominated as Fed chair. The market immediately priced him in as a hawk, someone who wants to shrink the Fed's balance sheet and run the economy hot with sound money principles. This nomination is why the dollar index is holding firm at 96.92. Usually a strong dollar kills gold. The fact that gold is still holding above $5,000 tells me the safety net is being tested by institutional fear. If you're wondering how we got here, I want you to pause and look at the info card on your screen. Last week, I did a deep dive into the latest CPI and employment data. That data is the foundation of the current correction. If you missed those videos, you're missing the why behind the what. In those reports, I warned that sticky inflation would force the Fed's hand. And that is exactly what we're seeing with the Warsh nomination. Take a moment to watch those after this video to get the full picture of how the 2% club operates. Now let's look at silver. Silver is currently trading at $77.62 after that historic margin-induced flush. Remember, silver touched $121 just weeks ago. It didn't fall because people stopped wanting silver. It fell primarily because the CME group raised margin requirements to 18%. Think of it this way. The rent on paper silver became too expensive, so leveraged traders were forced to sell. This is a gift to the 2% club. While gold is struggling with its invisible wall of $5,042, silver is undergoing a massive liquidity flush. In 2026, the spread on physical silver is the elephant in the room. If you go physical, you get zero counterparty risk. If the banks have a glitch during the Warsh transition, you have the metal. But at $77 spot, you might be paying $88 to $90 out of the door at your local shop. If you go paper, like PSLV or ETFs, you can buy at $77.62 with almost zero spread. As a retired advisor, I've seen people lose fortunes by being all in on one side. The most cost-effective way to grow your wealth right now is a 70-30 split. 70% physical for your sleep at night insurance and 30% paper for the rocket move back towards $100. This prevents you from losing 15% of your gains to premiums on short-term trades. Now, when I say 70-30, I'm referring to the amount you allocate to precious metals, not necessarily your entire portfolio. Now, what happens if you buy at $77 and silver drops to $65? Or gold falls through $5,000? Most people don't have a plan for the downside. Well, first, watch the 10-year treasury yield. It's currently at 4.24%. If it spikes above 4.5% this week, metals will bleed. This is your signal to stop buying. In a high-yield environment, the opportunity cost of holding gold rises and the algorithms will sell. Second, watch the K-shaped consumer. We are seeing a major divergence. While the S&P 500 is at 6,836, the average person is feeling the liquidation of their purchasing power. If we see a major drop in consumer spending in the March data, industrial demand for silver will fall, temporarily decoupling it from gold. And third, watch for the liquidity event. In a major market crash, correlations go to 1. If the tech bubble finally pops, people will sell their gold to cover their margin calls on Nvidia or Tesla. The plan is simple. Never go all in on a Sunday. If you have a set amount to invest, move 20% tomorrow. If the triggers in my checklist hold, you add. If they fail, you've saved 80% of your capital to buy the sale of the century at lower levels. So grab a pen. Here's your plan for the open. Remember, US markets are closed tomorrow for President's Day, which means the domestic NYSE and bond markets are shut. However, the global precious metals spot markets remain open, though liquidity will be thinner than usual. Trigger 1. Gold $5,040. This is the pivot. If the London core market opens at 8 a.m. GMT and we stay above 5,040 for the first 3 hours, the bulls are in control. If it drops below, we stay patient. Trigger 2, silver $75. This is your value zone. We saw 77 on Friday. If it touches 75 and bounces, the weak hands are officially out and the smart money is in. Trigger 3, the DXY 98.50. Watch the dollar index. If it stays below 98.50, the metals rally has room to breathe. If it breaks 100, we prepare for a deeper correction midweek. This is the level of detail we shall try and provide every Sunday. We aren't here to play games, we're here to build a legacy. My mother knew that, and I know that. The next 48 hours are going to be some of the most important for your portfolio in 2026. Don't go into Monday morning guessing. Look at the videos on your screen right now. I've linked the CPI and employment deep dives so you can see the data for yourself. I'm Richard. This is Money and Power. Thank you for being with me today.